So whenever you start a business, we believe that entrepreneurs should focus on solving a problem that they believe exists, that they can validate, where the market is large, and really create a product and a solution that the market needs. Once that's tackled and there's traction, maybe you pivot once or twice or 3 times, and then you capture the market, generate revenue, build a team, continue to build the company. Maybe then you raise a round of funding and you get to a point where it's substantial and you have investors. Once you have outside investors and outside money, it's probably time to start thinking that these investors are not here for the long term, just for a little bit of a long term, and that ultimately they will want to see a return on their capital. That's the right time to really start thinking about your exit and your exit strategy.
At the same time, I think early on, sometimes thinking about exits helps to make some decisions better. So if you know that a potential competitor would buy you and they're not in Saudi Arabia, for example, then moving into Saudi first might give you an advantage that makes you more attractive down the line. I don't think people should dream about exits and sit there and think about this or that. I think it can be distracting. And I agree with Noor that, focusing on solving a problem is the most important. But thinking about exit scenarios can help you make some options or decisions that will set you up better for how that exit may happen.
The public markets are more determined by market timing, market sentiment, liquidity, than they are by anything else. So when a company wants to think about their exit strategy, when a founder wants to think about liquidity for themselves or for their investors, all options should be on the table. A very small percentage of companies IPO. It's just they make a lot of noise when they do. So it seems like it's a lot. 70 to 80% of VC investments, the exits end up in industry M&A. And that's very telling. So as a founder, right, the IPO might be the dream, but the reality is that an M&A is a lot more likely.
I'm excited that in Saudi Arabia and in other countries around the region, they're starting to think about listing technology companies, and I think that will create additional options. But realistically speaking, as it stands today, again, to what Noor said, the probability of getting down the IPO path is incredibly, not just small, it's slim, right? It's really not all there. And so my view is that you're always looking to build a sustainable business at some point. It has to be able to hold off on its own. It needs to be able to, generate cash and be sustainable from a financial perspective. And then M&A or strategic buyers or mergers with other maybe companies in the space are probably the more likely options when it comes to exits. And there's so many different elements of that I could probably go on for quite a while. Obviously financial returns matter and people talk about that a lot. But I think thinking about the kind of meaningful business that you've built and the customers and how you reach them and what you provided to them and making sure that will go on is also an important part of determining a successful exit, if you like. I think employees need to be thought about in this process. It's great to exit a business, but if the competitor or the strategic buyer plans to just take the contracts over and get rid of employees, then it's bittersweet. Maybe the shareholders have made money, but the employees have been impacted negatively. I think of a successful business as being a well-rounded exit, where the employees get to continue their journey and even grow, where the shareholders have made their returns and feel appreciated for taking the risk, where the founder has done that as well. And then ideally where kind of the customers as well see the value that comes from that to them, because they're going to get a better service, a faster service, or a complementary service.
I would love to see more of the entrepreneurs in the region think about the company they're building and a potential exit as one step in a very long journey or one chapter of a very long book. So the most successful entrepreneurs that we've seen around the world are usually second-time entrepreneurs or third-time entrepreneurs. So when you start a company and you get to a potential exit, consider it, because it might be that if you really spent enough time, and we know entrepreneurs have no time, but if you did spend enough time thinking about what else might I do right now, you might come up with several ideas. And being a second-time founder is a much easier journey than being a first-time founder, or so our second-time founders tell us. So when we take a look at What does it take to build a successful company and get to exit? What does a successful exit look like for a founder? Any exit where the founder feels like, I have solved this problem, here's a potential party, my solution will continue to exist, and I can go on and do other things, is something worth considering. A successful exit is measured by so many different attributes that there's no one size fits all. User base, financial health, and potential for growth are all key when a startup is looking at being acquired by an investor or a strategic. So as well as the founder's propensity to be able to stay on and continue to lead the company into new growth, and the strategic fit. So I think that all of these factors play in, but most importantly, it's does the solution and does the company solve a real problem for the strategic? Strategics will only buy companies if they feel that this is something that solves a problem that they could not solve themselves.
When the assumptions that you've made when you started the business start to shift or change unfavorably, then it's time to think about an exit. So if you've assumed that logistics, that the way you're delivering gives you an advantage on speed, and that's why people buy from you, and all of a sudden that changes and everybody has the same ability to deliver quickly, then you need to think about an exit. It depends, right? Every circumstance is different and it's hard to give you one scenario on how it plays out. I think one of the surest signs of a CEO or a founder of a company that is well prepared for exit is who they've hired as number 2 and number 3, because they know that that is the layer in which the execution or the team that executes the growth, and it makes sure that the company is sustainable with or without them, if you like. Founders, I think, who try to make it just about them and their abilities and their capabilities become a little bit of a liability for the buyer, because it's like, well, if I buy the business and then give them a lot of money or give them an earnout, they're going to immediately leave. So it's kind of, it sounds contradictory, but actually having that second layer gives confidence to the buyer to say, you know what, even if they do, I'd love for them to stay and it's great to have them, but founders are founders, they want to go on to the next thing. Even if they leave, I know I have a great second in command.
In addition to those thoughts, it's important to note that different types of exits will have different requirements. So an IPO will usually lock in a founder for at least 2 years as a CEO, and he will vest those shares over time in terms of the ability to sell them. When you think about a strategic, that's usually another 2-year lock-in, either for the founder, as Basil mentioned, or for the rest of the team. But when you think about a trade sale, sometimes they're acquiring the technology rather than the talent, and it's easier to really bring that into the core entity without the team having to stay around for too long. So it really depends on the type of company, the reason for the acquisition, and the geographical location.
On a final note, it's really great what's happening in the region with exits. I mean, there's some real momentum, and we're super happy for the folks at Mumzworld, at Kitopi, see the swivel getting ready for an IPO. These are meaningful exits that really show something. And I know in some cases the founders are staying on and continuing the journey, and that's exciting for them too. I hope it inspires the other companies and really closes the chapter in investors' mind about, can technology investment really go full cycle and make returns for investors. So it's a super exciting time, I have to say.
And across the region, so I think it's not just in the UAE, it's also in Egypt. We're continuing to see these founders get their companies to different levels of scale. Previously we had Fodi IPO. We're looking at a few more hopefully in the next year as that form of exit. Our portfolio companies are definitely being approached. So now we have not only sellers but also buyers. It's a great market to be investing in. And as this market grows, we're going to be more and more involved in it and increasingly supporting these founders to scale the companies and find the right solution to liquidity for their investors. So it's the beginning of an incredible journey in this part of the world.